Hello, everyone. Thank you for your patience while we worked out some technical kinks. Thank you for joining our second webinar of Who's the Boss? The Lost Independent Contractors episode. Today's program will be presented by Witham's Richard Ruvelson and Israel Tannenbaum. Before we begin, I have a few housekeeping notes. Materials for today's presentation can be found in the toolbar located on the right of your screen. At the bottom of the toolbar, you will see a question box. All questions pertaining to the webinar content should be asked there. We will do our best to address them during the webinar. Be sure to answer all of the polling questions to ensure that you receive CPE credit for today's session. If you happen to experience any issues answering the polling questions, please be sure to pull your screen out of full screen mode. Once the webinar is over, there will be a pop-up asking you to complete a survey of today's session. Please take a moment to complete it. It's our way of being able to provide you with the best and most relevant programs possible. And with that, I will turn it over to Izzy.
Thank you, Ashley, and good afternoon, everyone. And thank you so much for joining us, and welcome to this special airing of Who's the Boss? The Lost Independent Contractor episode, where we're going to take a look at who actually was the boss, really from an IRS rule perspective. So to get started today, just to have a little bit of a high-end overview of what we're going to look at, Forms 1099, independent contractor versus employee considerations, some talk about California's program and issues around independent contractor versus employee considerations, go over the Form W-9 and talk a little bit about voluntary compliance. And of course, at the end, we'll have time for questions. So please type it in the chat box as mentioned, should you have any questions throughout. Now, to get started, we did want to talk about the new Form 1099 NEC. So beginning with the 2020 tax year, so right now, the IRS will require business taxpayers to report non-employee compensation on the new Form 1099 NEC. This was previously done on Form 1099 miscellaneous. This is actually not a new form. However, the last time the Form 1099 NEC was used was back in 1982. So for tax years prior to 2020, businesses would typically file the Form 1099 miscellaneous to report payments totaling $600 or more to any non-employee. Typically, this would have appeared in box 7 of the Form 1099 miscellaneous. In order to help clarify the separate filing deadlines that could be included within one Form 1099, meaning the same form would have several different deadlines depending on the type of payment being reported, the IRS decided to reintroduce the Form 1099 NEC, which would have a single filing deadline for all the different payments that use the form. And all other traditional Form 1099 miscellaneous income types, such as rents, royalties, will continue to be reported on that form, as we'll see a little bit on the next slide. And just really to quickly go over the high-level requirement, you typically need to report a payment as non-employee compensation if one of four conditions apply. Number one, you made the payment to someone who's not your employee, and this seems like a pretty simple concept, but as we'll see, it's actually very complex. The payment was for services in the course of your trade or business. You made the payments to an individual partnership or an LLC, so typically not payments to a corporation, and the payments to that payee were at least $600 during the year. Note that the PATH Act had actually accelerated the due date for filing Form 1099 that includes non-employee compensation from February 28th to January 31st, and eliminated the automatic 30-day 10 extension for forms that include the NEC. So it's obviously a due date that's right around the corner, literally, after this weekend, and something that hopefully everyone's on top of, but if not, should make sure to pay some attention to and really understand if they have any filing requirements as soon as possible. Now, the 1099 miscellaneous, as we mentioned, isn't going away. Beginning with the 2020 tax year, this form should be used for each person to who you paid in the course of your business during the year at least $10 in royalty or broker payments, or at least $600 in items such as rents, prizes and awards, payments to attorneys, Section 409A deferrals, or other forms of non-qualified deferred compensation. Now, since the IRS removed reporting for non-employee compensation from the 1099 miscellaneous, they needed to redesign this form as well. The biggest adjustment to this comes in box 7, which previously reported non-employee compensation, but now reports direct sales of $5,000 or more. And because of this redesign, it's important to review the updated 2020 Form 1099 miscellaneous, because the income type boxes have been shuffled around to account for the non-employee compensation box that was removed. So following a same as last year approach really isn't going to work, and you really need to pay attention to what items go where. Really, aside from that shuffling, there aren't any major changes to the 2020 Form 1099 miscellaneous. But again, it's important to understand that the boxes did move around. So you should really take note of where you're putting what number. And as I mentioned or alluded to a little bit earlier, the 2021 due dates are almost here. These are basically based on whether there's data present in boxes 8 or 10. If there is, this would be due February 1st to recipients and to the IRS by March 1st. So again, right around the corner, and something that you need to be on top of. And if there is data present in these boxes, then it would be due the 16th of February to recipients and to the IRS by mail by 3/1 or e-filing by March 31st. So to get a little bit more into the main part of our discussion, we wanted to talk a little bit about worker classification and the issues that go into that, and why one would potentially want to misclassify a worker. So tell us a little bit about that. I wanted to turn it over to my esteemed colleague, Rich.
Okay, thanks, Izzy. And, part of the reason, we'll be really honest, part of the reason we tell you why people misclassify and how misclassifications get discovered is so you can see the impact and the risk that you subject yourselves to if in fact you do misclassify. And most of the time in our experience, it's about 50-50 as to whether it's intentional or not intentional. But in our experience with IRS agents, if it's repeated, they will see it as intentional. So, and that has a difference in the penalties. And so, but first of all, why does it happen? You want to save on taxpayers, want to save on Social Security and Medicare. That's very often cited right now. When we hear discussions of the e-commerce workers that are, being that they want to save on Social Security and Medicare taxes, the companies, places don't want to pay overtime pay. They worry about employee benefits and their cost. It costs a lot of money to provide vacation and sick pay. So, and also unemployment compensation tax, they don't want to pay. Of course, those of you who are at 501c3s, you know that you're exempt from federal unemployment tax. Workers' comp insurance. What the worker wants it. The worker wants to put the income on a Schedule C because they can then offset that income with their expenses. And finally, the worst excuse we ever hear, others do it. And unfortunately, that's all too common. And you're not going to get anywhere in the with the IRS if you say, well, another entity just like us does it. Next slide. Okay. How does it get discovered? IRS does an audit. They audit organizations in the ordinary course. Whenever they audit an exempt organization, they look at independent contractors versus employees. They look at your receivables, and they look at your payables. Termination of the worker relationship. You thought you had a great relationship with this contractor. Maybe their term was up. Well, they needed a check. So they decided that they were an employee, and they go down and they file for unemployment. Bitterness, or the individual just needs unemployment. They don't have other gigs to replace yours. Employee and contractor relationships in the same year. So you treat employees as contractors for certain tasks. It's really not permitted. And one of the things that the IRS will do, and I've had audits where they have shown up on site with this information, and in fact, where we had some employees paid as, they were employees, but then they also performed some functions we thought were, the client thought were on the side or different. They had them as independent contractors. Well, the IRS had that when they showed up, and that was their only issue, ended up being the only issue on the audit. And finally, contractors in the new economy. We're going to talk about that a little bit more in a while. Next slide. Now, some other things that you don't think of, and these get a little bit more serious, and it's not just the IRS that picks people up, it's the states. You think someone's an independent contractor, it wasn't the unemployment claim, they filed a workers' comp claim. Or there's a Fair Labor Standards Act issue regarding wages, and also state wage and hour laws. ERISA issues with plans, Family and Medical Leave Act, National Labor Relations Act, anti-discrimination laws, tort and contract liability matters. Someone's driving a truck, maybe doing deliveries for your entity, and they have an accident. Then it's going to come up in the tort and contract, or the tort liability matter. The other party in the car accident is going to sue. Next slide, please. Okay. Before you determine how you're going to treat the payment to the service provider, you have to understand the relationship with the service provider. Is it an independent contractor? Is it an employee? You've got a common law employee. Do you have a statutory employee or a statutory non-employee? Next slide. Okay. What's an independent contractor? Generally someone or an entity selling their services to the general public. Examples include doctors, lawyers, accountants, contractors, and others who are in an independent trade, business, or profession in which they offer their services to the general public. Now, just to highlight this area for a little bit, when you list on your Form 990, you list your highest paid independent contractors. Those are people who fall into, or people or businesses that fall into this classification. And you don't have to send them a 1099. You may not be sending one if they're a corporation, but you still have to list them on the Form 990 as an independent, consider them with respect to being independent contractors. Not independent contractors. Individual isn't an independent contractor if he or she performs services that can be controlled by an employer. What will be done and how it's done. That's if that's determined by the employer, then likely that they are employees. This applies even if the individual is given freedom of action. So, you have to be careful with that. And so we'll go to the next slide. Now, if workers are independent contractors under common law rules, workers can be treated as employees by statute for certain employment tax purposes, if they fall within the categories that are listed on the next slide, and they meet conditions described under Social Security and Medicare taxes. Next. And right here, we've got, just to go through this so we don't run out of time, but you've got this here. These are the different classifications and what makes someone a statutory employee. And under these circumstances, they're not an independent contractor. Next slide. And this is what you do with respect to Social Security and Medicare taxes for statutory employees if all of the conditions are met. Contract provides for the services, no substantial investment in the equipment, and the services are performed on a continuing basis. So that's where you withhold Social Security and Medicare from statutory employees. Next slide. Okay, and these are the different categories of the statutory employees. We'll go to the next slide. And the next, okay, we have our polling question.
All right, polling question 1. Tony gets a second job as a museum guard at the Fairfield Museum and History Center in Fairfield, Connecticut. Tony, who will be guarding the Sculpture Garden, will be a statutory employee, an independent contractor, a statutory employee, or none of the above.
Okay.
So think through this one. Make sure to get these votes in. They all count towards your CPE credit.
So has everybody answered?
It doesn't look like everybody has gotten their votes in. Make sure to get those votes. You must answer all of the questions. We just have 4 to get your CPE today. And we will close it out in just a minute for the sake of time. All right. And we're gonna close it out. Okay, so it looks like we got the most votes for A, a statutory employee at 50% of the votes.
Okay, we don't know if Tony is a statutory employee. There's nothing that would tell us that. We don't know whether Tony is an independent contractor. It's unlikely none of the above. Tony could be an independent contractor. However, Tony is probably an employee. The best answer to this is that Tony is a statutory employee. Why? Because Tony's guarding the Sculpture Garden. So he is guarding the museum statues. So with that, I'll turn it over to Izzy.
Thank you, Rich. Yes, excellent analysis on that. Okay, so talking a little bit about making this determination and how one should, it's important to understand the actual rules that the IRS is going to look at when reviewing this determination. So the IRS actually uses common law tax principles to determine if a worker is an independent contractor or an employee. And these rules focus primarily on the level of control an employer has, meaning whether the employer defines what is being done and how it will be accomplished. Now, in determining whether the person providing the service is an employee or contractor, all information that provides evidence as to the degree of control and independence needs to be considered. In the past, the IRS had used a 20-factor test to evaluate whether what the actual classification of the workers would be, whether contractors or employees. However, presently, these factors have actually been compressed into only 3 general categories for the IRS review of the specific situation, these being behavioral control, financial control, and the relationship of the parties, which we'll take a bit of a closer look at each of these. However, first, it's important to be aware that the IRS isn't looking at specifically any one factor, but one factor can actually be enough to cause the IRS to determine that a worker is an employee versus independent contractor. And ultimately, there's no magic number of factors which will determine the status. So really, this is one of those cases where all the facts and circumstances do need to be considered when coming to a conclusion as to the classification of the individual working for your business. And you should also note that the factors that were used on the 20-factor test are still valid and applicable and should be considered when you're making this determination. So even though the IRS has condensed these, it's important to actually look at all of them when documenting and making any determinations on employee status, because they all will speak to what the correct classification is. And it's also important to note that each state has its own way to evaluate the status of workers for state wage purposes, hours purposes, working conditions. You know, several states really more all the time are using what's called a 3-factor ABC test. In brief, the test requires that all three factors be met for the worker to be considered an independent contractor. Those being the worker is not under the control of the employer for the performance of work. The worker must not be within the usual course of the employee's business, and the worker must be what's called customarily engaged in an independent trade or business. That's the same as the work performed for this employer. So the work they're doing is actually their business, not just their job for this one employer. But in terms of these 3 condensed categories we just talked about, behavioral, financial, relationship, I did want to take a closer look at each of these to understand their nuances, as that really does factor in to the actual determination. So looking at the first one, behavioral evidence. Essentially, does the organization control or have the right to control what the worker does and how they do it? Essentially, this means that the employer really has control over the result of their work, but not the work itself for them to be an independent contractor. Overall, there should really be very little to no behavioral control over the individual and how they're going to perform their tasks. And taking a look at some of the more specific factors that will go into the IRS consideration when looking at behavioral control, we do need to look at facts that show essentially whether the business has a right to direct and control how the worker does the task for which they were hired. As we just said, it's the result, whether they can actually direct the result or how we get to the result. Now, types of instructions you would give that would really be factored in terms of behavioral control would be things like when and where to do the work, what tools to use, what order to do the work, regarding issues regarding hiring people to assist you to do the work. Typically, you would not be hiring people if you were an employee directly. If you were an independent contractor, your employer would really have no control over who you hire to assist you. Another item that the IRS will look at is the degree of instruction given, where more detailed instructions on how to perform the work would likely indicate employee status versus independent contractor. The IRS would take a look at whether there's a system evaluation. Typically, evaluating how work is performed indicates employee status, whereas evaluating the actual end product of the work would indicate independent contractor status. On the job training as well, or continuing job training would support employee status versus independent contractors who are typically responsible for obtaining their own continuing education. Now, the next factor that the IRS would consider would be the financial evidence, which essentially looks at whether the business aspects of the worker's jobs are controlled by the employer. You would look at items like how a worker is compensated, are their expenses reimbursed, really issues that would tell you whether the relationship here is employee versus independent contractor. Additionally, when one chooses to hire an independent contractor, you're typically determining a set fee by the hour or by the project, whereas with an employee, it's typically indefinite employment at will. So taking a closer look at some of the nuances that the IRS will consider when looking at financial evidence. Some of the facts that would show whether the business has a right to control the aspect of the workers include significant investment. So whether an independent contractor would have to invest themselves in equipment, workers, or whether that's provided. Now, it's important to note that no precise dollar limit exists that would speak to one status or another. So unfortunately, there's nothing that can tell you this in black or white, but this is a factor that should be considered and will speak to the proper status. In terms of expenses, independent contractors are more likely to have unreimbursed expenses. As we mentioned, typically there's a negotiated fee, and anything that falls beyond that is taken by the contractor. It's on them, and the owner or employer would only actually pay the negotiated fee. And the risk of losing money, so the opportunity for profit or loss, this is actually a key factor in determining employee versus independent contractor, where who is bearing the risk of losing money on the project. If it is the independent contractor, that would speak to independent contractor status, whereas if the actual payor or the business would be the one losing money, it may speak to the individual being an employee. Now, independent contractors are usually free to seek out other business opportunities while engaged in current projects. So whether employees or not, they're usually precluded from having other employment. So that factor, whether they can actually market and sell their services to the general public, will speak to what the proper classification is as well under financial evidence. And finally, the method of payment. So employees are generally guaranteed a regular wage, whereas contractors, as we said, are typically paid a flat fee. And although professionals may be paid hourly and still be independent contractors, it's really critical to explore all the facts around the given situation, because again, as we said, no one factor will really necessarily speak to what the result is, but altogether, looking at the facts and circumstances, there need to be enough of them to really support a position in terms of how you actually classify the individual. And the third and final overriding category that the IRS has condensed that 20-factor formula into would be the relationship evidence. So this is really determining your new hire status and the kind of relationship you have with them, looking at things like how long it's going to last, do they have benefits? So just to kind of dive in and take a little bit of a closer look at the different factors that will go into this relationship aspect. Written contracts, these are important, but really aren't definitive, as the IRS isn't required to rely on your contract's definition of the business relationship, whether employee or independent contractor. So while it is important and will be looked at, it's definitely not going to be a very definitive factor. Benefits, we see typically independent contractors don't receive benefits. And this is actually one of the main issues that can arise based on a misclassification of employee versus independent contractor, because not having offered required benefits could actually be a plan violation. And this can raise major issues for the employer, which can be very costly to correct and actually make the individuals who were not offered required benefits whole. Another factor to look at is the permanency of the relationship. And this is actually one of the more significant factors, because the more stable and steady and really long-term a relationship is, the more likely the IRS is to view that as an employee, whereas independent contractors are usually hired on a temporary, short-term basis. And finally, if services are provided as a key activity, meaning that it's more likely that the employer will be able to provide direction and control over the activity if it is something that's really key to that employer's business. And therefore, it would likely indicate an employee relationship. Now, overall, it's important for businesses to consider all of these factors when determining if a service provider is an independent contractor or an employee. As we said, some factors may indicate an employee, other factors may indicate an independent contractor, and no one factor will stand alone in making this determination. So you really need to consider the entire relationship. And ultimately, it's important to remember that the IRS presumes that a worker is an employee unless it's proven otherwise. So the burden of proof is really on the employer to show that they classified a worker correctly. To based on that, it's really critical that you have detailed documentation of the analysis and determination so that you have at your fingertips the information you need to support this determination should it ever be questioned by the IRS. And with that, I believe we have our next polling question.
Polling question number 2 is launched now. Angela opened an advertising agency and hired Tony as a ringer on the company baseball team. A nod to his past. Tony has his own bat and mitt, but was an employee rather than an independent contractor. True or false? Again, make sure to get those votes in. You must answer all of the polling questions in order to receive your CPE for today's webinar. And while we're waiting, we actually do have a few questions. So would you guys like me to read one of them off now or wait?
Yeah, sure. We can do a question.
Go ahead.
All right, so everybody keep getting those votes in. And one of the questions we received was, should businesses send a 1099 MISC or 1099 NEC to their accountant's firm if they choose to do so?
So yes, I'll take this, Rich. So yes, businesses should. Typically, accounting firms are organized as partnerships. I believe most are. So in general, they would not receive the exemption for being a corporation. So for the most part, you would have to send that. I believe it would still be the Form 1099 as was done, or it would be the 1099 NEC. So that now has moved over off the 1099 miscellaneous, similar to attorney payments and issues like that. So that's definitely something that will still be required. And if you did pay them over $600, you actually have to send that to them as well.
Right. And it's just very, very quickly, Izzy just nailed it. It's required unless they're a corporation. So for your accounting firms that are professional corporations, such as Witham, you're not required to send us a 1099 NEC. However, you need to get a W-9 from us. And regardless of who your accountant is, you should be getting a W-9, and Izzy will talk about that a little later. So, are we ready on
All right.
the polling question?
Yep,
Okay.
polling questions closed, and it looks like 80% voted true.
That's correct. Even though Tony had his bat and his mitt, he was told where to go, when to be there. He was told where to bat in the batting order and told where to play in the field. So, control. Tony was an employee. Okay. Okay. So, okay, very briefly, and we're going to go through, just mention the California rules. And why are these important? Well, this is an area where employment law, California tends to be a harbinger of things to come because they're a trendsetter with regard to employment law. And the key with respect to AB 5, and AB 5 was enacted a few years ago, effective January 1st, 2020. And those of you who are in California, some of my clients are on this call, we looked at some of your independent contractors to see where you were with respect to AB 5. And we did have some changes for some of you. But Izzy mentioned the 20 common law factors, which then became 3. Well, under California law, they took those, the 20 and then the 3, and they came up with an ABC test. And what's interesting about the ABC test is that if you answer no to any of the questions that are on this slide, or any of these fact patterns, then you have an employee. And I want to very briefly go through, just mention the one in the middle, the workers performing work tasks that are outside the usual course of the company's business activities. If you say yes, independent contractor. One of the things that always happens with any business, including exempt organizations, is that when the service audits and looks at a particular group or classification, a group of employees in particular positions, they look to see how important those jobs are in accomplishing the organization's mission. If they are important in accomplishing the mission, then the service is always going to argue that those individuals are employees. And so that's where, this comes from, but that's just a great example of the three factors and, just this sort of a really important factor. But the essence of this was to reclassify not just gig workers, but to reclassify workers all over the economy in California, so that many independent contractors became employees. Go to the next slide. And if you go on the next slide, where you see we address Prop 22, which was just enacted in November, and allows gig app-based companies like Uber, Lyft, DoorDash, and Instacart to continue their treatment of rideshare and delivery drivers as contractors. And so now the California law, as codified in AB 5, that was very broad, has now been narrowed. So it does not include these gig workers. And the initiative was intended by the companies up above to establish precedent and policy throughout the country. And those other states that have initiative provisions, this is coming. So expect it. And this is worth, billions of dollars across the country to these companies. So keep this in mind. You're going to see it no matter where you're located. You're going to see something like this. Next slide. Okay. And these are the rules with respect to gig workers and how they're deemed independent contractors. We'll go to the next slide. And, you can see, just so you see that, yes, there are some rules. They do establish, rules under which the gig economy workers do get benefits. I don't think this is the same. It clearly doesn't offer the same exception to workers that the other provisions we talked about, that you deal with employees. But they couldn't get away with doing nothing. So this is what they determined they could do, and what the gig economy companies were willing to pay for and are willing to pay for. So expect this to be lobbied in every state of the union, and where they can, they will try to have initiatives. And with that, we'll talk about W-9s.
Yes, thank you, Rich. So Form W-9. Now, there's 4 common situations that you may encounter Form W-9. Number one, when we talked about, obviously, a contractor getting paid more than $600 by any one particular business, or if you're paying an independent contractor more than $600. Now, you will need, as a business, to collect a completed Form W-9 before you can send them a Form 1099. So this is one instance where we may need the W-9, and probably the one in which we'll encounter it the most, and we'll elaborate on that in a second. Another situation you may see it is banks sometimes may request them when opening a new account. in order to submit certain transactions such as interest distributions and proceeds from real estate transactions. You may need to provide this. And finally, I think we see it a lot when there's cancellation of debt. You may be required to file a Form 1099-C. And note that the form itself is retained by the requester. This is not actually sent to the IRS. So you're just providing the W-9 to provide this information. Now, the W-9 can really be critical for proper compliance. For example, talking about what we mentioned earlier, if your business paid a contractor more than $600 in a year, and you're required to file the Form 1099 NEC. However, if the independent contractor is a C corporation, a 1099 NEC will not be required. So how would you know, essentially, what is the classification of your vendors? Well, this information can be found on the Form W-9. And it's critical to get this form upfront and request it from all vendors before you're issuing payment to them, as this is the time when it's most opportune and they'll most be willing to provide it to you, because obviously everyone wants to get paid as soon as possible. Now, backup withholding may be actually requires that businesses and financial institutions withhold a flat 24% of income. This could potentially apply if you didn't provide an accurate identification number, such as a social security number, whether if the IRS has notified you that your informational number is not correct, or if you underreported interest or dividends on income tax returns in the past, then you get warnings about that. So that's more of a specific scenario. But backup withholding generally applies to only to certain types of 1099 income, including interest, dividends, rents, royalties, commissions, and fees paid to independent contractors, as we said. But overall, I think, again, to reiterate, it's critical that you obtain the Form W-9 right away from individuals, because this is the time prior to paying their invoices when they're going to be most willing to provide you with this Form W-9 information. And as we just discussed, this can really have an effect on the types of payments and the potential withholding required. So you really need to understand what their status is, and the best way to do that is through the Form W-9. And with that, I believe we have the third polling question.
All right, polling question 3. Form W-9 must be filed with the IRS. True or false? And we actually have another 2 questions. Would you guys like to take, actually 3. Would you like to take one?
Yeah, we'll take one.
Sure.
All right. Do we still file 1099 NEC for a contractor that is refusing to provide us his social security, EIN, regardless of attempts to collect that information? Is the business owner at fault for the first year that happens?
So there is actually a separate process to go through when the individual is not providing this, and that's something that has its own set of rules. You do need to do some level of filing around that, just to show that you've done your due diligence, and in that case it would put it on the individual. It would be their responsibility and their failure to comply, and potentially most importantly in this situation is you may actually be required to withhold on any payments that are due to them. So definitely something to look into a little bit more and get more information about, because you do have some requirements to make sure that the responsibility doesn't ultimately fall on you.
Right. There is a backup. They're called backup withholding requirements. And what I want to emphasize is that, this is not an issue of getting a W-9. You don't want it to be an issue of getting a W-9 before you file the 1099. Where you want to be, and best practice, is you get the W-9 before any services are performed. It's a matter of leverage. That's when you have the most leverage. And the next most leverage is, even if they've performed services, it's going to be before you pay them. Now, if you go for W-9s after you've made payments, you've lost your leverage. And the answer to this question must a W-9 be filed with the IRS is false. The reason you are getting these W-9s is to protect yourself so you can get the information and prove that you were not subject to backup withholding requirements. Incorrect 1099s frequently get audited by the IRS. If you have enough of them, then your entity, it can be the reason for the audit. And the IRS has a number of auditors within the exempt organizations group or division that specifically audit 1099s. So be prepared for that. We've had 1099 audits, especially at large organizations like where they're making lots of payments, like VIVAs. They're paying all the healthcare providers and the health and welfare VIVA. We get lots of 1099 audits now. So you need to get the W-9s and do it when you have the most leverage before anything happens. Okay. So with that, we'll just go very quickly. Next slide, talk about voluntary classification settlement programs. This is an IRS program under which your organization can go work out a deal with the IRS. If you've got a particular group of employees, let's just say that you didn't have your maintenance people, or you didn't have your teachers, or, a particular class of care providers, that you were treating them as independent contractors, but Izzy and I have said, no, they're employees. Well, you want to fix that going forward. How do you fix that? You enter this voluntary classification settlement program. It's existed for a number of years, and it's a great deal. We had a client that got caught up under state law with respect to some particular employees. And the state came in and did an audit for their own unemployment purposes. Well, we went in after the state, we settled the state, but before we got the notice, we went in and we put the client into the voluntary classification settlement program. What was potentially over $100,000 of taxes and penalties became about $10,000. So it was a really good deal for the client. So if you've got some issues that you're concerned about, please contact us and we can help you. And this program is really, really beneficial. And you can read more about it in the subsequent slides. And with that, we'll just go to very briefly to talk the non-resident aliens. Izzy, do you want to just finish up NRAs briefly? We can answer a few questions then. Okay.
Absolutely. I think that, it's almost along the lines of the same issue we talked about earlier. So by non-resident alien individuals, so individuals not residents of the U.S. Who are performing services in the U.S. as independent contractors, they actually are subject to different rules than a U.S. person who would be performing services as an independent contractor would be. There are also potentially, depending on where they are a resident, different tax treaties with different jurisdictions around the world. So this really comes back to what we were saying a few minutes ago about Form W-9 and how critical it is to receive this, because otherwise you really have no way of knowing as to what the individual or business's actual classification is for US tax purposes. And that can lead you to a costly mistake in terms of how you categorize them, how you pay them, whether you withhold properly or not, and ultimately whether you're compliant and whether the IRS would consider you to be compliant upon a review. So again, it's critical to make sure that you're dotting the I's and crossing the T's in terms of the compliance related to this type of employer or independent contractor compensation, and really critical to obtain those forms W-9 so that you know you're doing it correctly. And again, this applies both at the domestic level and when you're working with people from other countries where, as we just said, there may be additional requirements.
Okay.
And with that, I believe we have our final polling question.
All right. Polling question 4 is launched. Who played Angela's mother, Mona Robinson? Judith Light, Alyssa Milano, Catherine Helmond, or none of the above? And I'll throw another question at you guys that we got through the question chat box. So this question is, does an LLC receive a 1099 or 1099 NEC?
So typically, it would probably depend on why you're actually paying the LLC. It could potentially be either one. If it's like we talked about earlier, where it's an LLC, is say a professional services firm that you're paying for services, likely that's going to be the NEC. And you know, again, it's going to come down to the different types of income. I would say that it's important to understand the facts and circumstances around each situation and what the characterization of the actual payment is. But typically, you're going to see the new form 1099 NEC used for these types of contractor service provider payments.
Okay. Thanks,
Right.
Izzy. With that, we will answer the final question. Mona Robinson was played by Catherine Helmond. Alyssa Milano played Samantha. Tony Maselli's daughter, Judith Light, played Angela Bauer, Tony's boss. And with that, I want to thank you for joining us today. It was a good opportunity. Once we came up with this title, it was a good opportunity for Izzy and I to take our flannel shirts out of the closet, since that's what Tony wore all the time. And so with that, thank all of you. And we want to thank Ashley for producing this today. And if we have any more questions, Ashley, can we answer for 1 or 2 more minutes?
Sure, yeah. If anybody wants to stick around for another 5 minutes, it looks like we have 2 questions. Any other questions that come through, feel free. For those who are hopping off, thank you for attending today. So yeah, let's jump into these few questions. So must the 1099 NEC be filed by February 1st electronically to the IRS and New Jersey?
So the 1099, I'm sorry, the 1099 NEC due dates. So the 1099 NEC, it depends, at least from an IRS perspective. I'm just trying to look up because it depends what kind of information you're providing. However, the typical due date will be based on the PATH Act, which changed the form 1099 filing due date that includes non-employee compensation from February 28th to January 31st, and did eliminate the 30-day extension. So January 31st is pretty much the date you should be looking at for that, and probably do want to make sure that you're on top of that at this point.
That should cover NECs.
All right.
Yeah, that should cover to NECs for the most part. Depending on the character of the payment, if you need to do the 1099 miscellaneous, you have a little bit more time in terms of getting those out.
All right. Okay, and then the last question, other than a very nice thank you from Valia, if I'm pronouncing that correctly, is you mentioned looking at the length of a contractor's time with the company. They may be considered employees if it's a long-term contract. Does the IRS have a guidance for this?
So unfortunately, there's no specific guidance, and I think that, you know, it could really go either way. You could have a long-term contract that's an independent contractor, you can have a long-term contract that's employee. Typically, a lengthy contract does fall into situations where most of the facts and circumstances speak to someone being an employee. But again, as we said, no one factor is going to determine this. So you can very easily have a long-term independent contractor relationship or business relationship and commitment, but at the end of the day, they can still be an independent contractor because there are other factors which really do speak to the fact that that is what the relationship is. So again, there's never going to be one black or white clear-cut answer, but as long as more of the factors that we talked about point to one status than the other, you should be okay in making that determination.
Right, but just to make the point that time is a factor. Length of performance of duties, length of time, but it's not determinative at all. And a lot of people, one of the things that we get asked frequently is, the first fact we're given is, well, gee, this is just a short-term position, or it's a part-time position. Well, short-term, part-time, if it's an employee, it's still an employee. It doesn't matter. You have to look at the other factors, go back to that 3-factor test. Remember, it used to be 20, became 3, and then think about the California ABC test. And once you do that, those don't mention time. So, it's not determinative. And if we don't, before we answer any more questions that are on here, feel free to ask afterwards. You've got our contact information, and you can also just do it through the webinar. So please feel free to ask questions, and it's been a pleasure to talk with you today. So anything else?
I think
Ashley?
we're good on our end. Yeah, I just wanted to make note, please make sure when the webinar is completed and everything has been exited out, there will be a survey that pops up. Just take a second, like I mentioned in the beginning, just to complete that survey. And we hope you got a lot of good information out of today's seminar. Thank you for attending. And if you have any other questions, like Rich said, please feel free to reach out to either Izzy or Rich, and they will be happy to answer any further questions. But that will be the conclusion of our webinar. So stay safe, everybody. Stay warm if you're not on the West Coast, enjoying the nice sunshine, and have a great rest of your day.
Thank you.
Hey, thank you, everyone. Take care.
Take care.